Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So, Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff. Evening, Alex.
Hello, Charlie. Cheers. Oh.
It's okay, relax. This is Alex's first glass of red wine. It's before the watershed.
It's before the watershed, no obscenity.
So we are both sober, but enjoying a glass of red wine. Now, it's not funny.
No, it really is.
It's not funny. Did you see that video about from Saving Private Ryan? Did you not see that meme video put up about?
No. Well, this is on X, is it?
Yeah, I know. I put it on YouTube as well.
I'll have a look.
And I said, not everyone will find this funny, and I was right. And I sent it to a friend of mine who has a lot of stocks, and he went too soon. And it's basically the beach massacre scene,
yeah.
and with memes like Tesla stocks and Apple stocks and personal TikTokers being blown up with like.
But I'm sure we said on Thursday or Friday. When was I very, very drunk?
Friday.
I'm sure we said on Friday, don't panic, just wait for it to settle down.
I did. No, we have said that. We've definitely said don't panic, wait for it to settle down. And no one's listening, I don't think.
No.
Now, listen, everybody. I'm in that place where the internet's terrible. If the sound is bad, please don't say so, because we're going to carry on regardless. I've got a backup audio recording, and I will upload this to the audio podcast. You can find it Moving Home with Charlie on Apple or Spotify. So if the sound goes to shit during this live stream, don't worry, I'll upload good audio afterwards. Okay. So yeah, no, there's no tea. It's wine tonight, Nick. Hello, Jay. Hi, Modi, Sandra. So everything's fine. So he suspended the tariffs for some of them, and now the stock market.
The Dow, the Nasdaq, the S&P. But I love the way that he waited until after all the European markets were closed, so we could just see all the red.
Oh, and he's also waited
Europe.
for everyone to finish selling their stocks.
Yeah.
Before they go bing, bing. Which is why, for those of you who follow me on X, I put that thing saying, look, we are in a completely chaotic and unpredictable scenario.
Yep.
And if you try and put on trades to prevent losses, the chances are it's going to punch you in the face or punch your portfolio in the face. And honestly, it's so unpredictable. It is impossible. Nobody knows how this is going to play out. Nobody. But all we can do is see what's happening and watch and wait. Everything is just going up, going down, going up, going down. No one knows. And I would just stay out of it unless you are an extremely experienced trader who really understands it and is happy to make trades every few hours and get lucky and roll the dice and gamble. But even then, you are juggling with double-ended knives, basically.
Yep.
So, but I did a survey on X about, which I think backs this up, right? That if you only take away one thing from this video, it's this. Nobody can possibly know how this plays out.
No.
Okay? Nobody.
Not with Trump at the wheel.
Not even Trump knows how this plays out.
No.
Right? Because he cannot predict what other countries are going to do. Now, I did a survey on X. It had over 1,000 results. This was yesterday. Asking you guys what you thought the stock market crash effect would be on the UK housing market. And there are the results. And you'll see that the number one answer is don't know. You guys, I think, are the wisest, right? Some of you said no noticeable difference. I don't know. I would be surprised if the UK housing market emerges
Unscared.
unaffected
Yeah.
in any way by this. I'd be surprised, but I could be wrong. Some people think rates are going to get cut, and so prices are going to go up. And some people go panic selling prices down. Someone said, no, it's 1 and 3. Rates are going to get cut, and prices are going to go down.
That, to be honest, that is where I would go.
And that's where Kicking Mustang goes as well.
Oh, really?
Mhm.
Okay. Well, we are in agreement again.
I think.
Violent agreement.
So, but the other, I can remember as a young trader, my first big win. I put a trade on a 24-hour trade on short sterling futures. I did a spread because that limited my exposure.
Yep.
I thought the employment figures were going to be a surprise. This is 1991, and they were a surprise, and I made money. I'm like, oh, that was easy. And then I put another trade on.
Wrong.
And it went the other way, and I lost even more than I'd made.
Yeah.
Oh, and the point is this: to all of you who've been cautiously and carefully and wisely investing and spreading your money around while you save up your deposit for your home, who've just seen the value of your portfolio go down significantly for the first time since you've had one, they're there. It's okay. It happens to all of us,
Yep.
right? Even the world's most successful traders have been burnt many times. If it hasn't happened to you yet, it will. I mean, it probably just has, actually. So that's one thing. I then did another survey today. And by the way, the point of this thing on the screen here is to show you that no one knows what's going to happen, right? All we've got are educated guesses. But the only certain thing right now is that uncertainty levels are very high.
Although, interestingly, the VIX, because of the Trump announcement,
Volatility index, yeah.
has also dropped substantially. It dropped from, I think it was up around 50, which was as high as it was. I mean, 2008 was the only time it was higher. I mean, COVID was the only time it was higher. Can't remember which, but it's down around, where are we? I'll look it up.
So the VIX is the volatility index where you can actually trade uncertainty. It's the uncertainty index, basically.
Yeah, so it got to 80 during the financial crisis, and it got to 66 during COVID. It got to 60 just in the last few days, and it's down to 37.
Well, I'd be a buyer of that.
Yeah,
I'd be a buyer of uncertainty for some considerable time to come.
Oh yeah,
it's going to go up and down all over the place. So this was the other survey I did just today. Not that many votes so far, but I asked people, if you're in the process of buying or moving home, is the market turmoil making you pull out completely, worry but proceed anyway, or proceed as planned, whatever? And the majority, 38%, are proceeding anyway. 37% are proceeding but a bit worried about it. And 25% of you said you're pulling out completely.
yeah, but that's still 75% staying in, which if you look at fall throughs and failures in 25% is not unusual.
No, it's not. No, but this is a sudden
out of the market,
yeah. So that, I mean, that's again, if you are trying to move now, you know, there will be chains breaking. You know, house sale chains breaking because of this.
I love Willie Jr.
Yeah. Let's put that on screen because that's just too good.
Fantastic.
I'm a very good trader. I like to panic sell when prices fall and then buy back after prices have recovered for a nice net loss.
Well done, Willie Jr.
Buy high, sell low. Yes, literally. That's remember Tim Nice but Dim.
Tim, yes. Oh dear.
Modi says, Charlie and Stig are the only reliable source I listen to. Sorry, not sorry. Very wise of you. Very, very wise. So you were saying to me earlier that even though Bloomberg's reporting gilt yields are spiking and soaring, they're not as high as January.
Well, hang on a second.
Depends which year.
Short and mid-term. So if you go to the 10-year, I think it's about 4.8. I have a PC. Why don't I just look it up? So they've closed at 4.815.
What, 2-year?
No, the 10-year.
10-year.
Which is, so short and mid-term, they are not as high as they were in January. But long-term, yeah, they're concerning. When you look at the 25 and 30-year, that that's higher than it was back in 2007.
Right, so I'll just put the 10-year up on the screen. Right, that's year to date. So your point there is that actually we're not as high as we were in mid-January.
Yeah, mid-Jan was about 4.9, and we're at 4.815. We're close. Don't get me wrong, we're very close. But
Yeah, so it's high, but it's not shock high. And it was,
well, it doesn't warrant the headlines. If you expand that graph so that it looks back to 07, you can see that we're still below that level.
right, to 07, there we are. That's January 07. Yeah.
You see, we're still below that level. What I find amazing is that in January of this year, there were a couple of headlines which said things like, there could be trouble brewing and people don't like Rachel Reeves' budget, and there may be margin calls on the gilt market. There were headlines like that. What they didn't say is what the headlines have said in the last few days. Death spiral, everyone's going to die at the end of the world.
Okay, so the UK 10-year gilt, and for those of you who don't know anything about the bond market, this is a better indicator of what's likely to happen with mortgage rates. So the 5-year is the best for that.
Yeah.
And the Bank of England base rates. So even though some people have been saying, well, the Bank of England is an emergency base rate cut, as your graphs have shown from last time they did that, that doesn't mean mortgage rates are going to come down, does it?
No, it doesn't. Normally it takes, normally. The last time this happened with the financial crisis, it took fully 4.5, nearly 5 years before the mortgage rates were an actual reflection of the Bank of England interest rate. And that was because the markets just didn't believe that rates would be held at 0.5%. They just kept believing they would come back up. It took all the way through until about 2015 before you got close. And actually, they hit their lowest point around 2020, 21.
Okay. So these are, I've now got the 5-year on screen, and that's way below. So that's just year to date, right? That's just this year so far.
Yeah.
And it's still quite a lot lower than it was in January. It has gone up in the last couple of days.
Yeah.
It's gone up from basically 4% up to 4 point. So
yeah, it's
almost a quarter of a percent.
Yeah.
And that's a 5-year gilt. So that's not showing anything dramatic, is it?
Well, this is the problem. 0.25% for most of us is fuck all of fuck all. Sorry, excuse my language. But in gilt terms, that's a big movement. 0.25% is important. But you're quite right. In comparison with, again, if you go back to pre-financial crisis, when interest rates were a little higher than they are now, but only by 0.5%, you see exactly the same thing. The gilt and the interest rate matching up. And
what's the most important of all the things to watch? Stock market, or the government bond market, or central bank interest rates? What do you think the one ordinary home movers should be?
Over the housing perspective, why aren't they looking at the SONIA swap rate?
No.
In which case, probably gilt. The Bank of England rate is the rate. The gilt is what the market believes it to be. And I think that has a much closer correlation with the SONIA swaps than anything else. So if you want to know what the mortgage rate is going to be, look at gilt yield.
Heard it here. Look at the gilt yields, so the 5-year gilts or 2-year gilts.
5 year, exactly.
Now, okay, so I know someone, immediate family, who had to make a 2 or 5-year decision last week.
Which way did you jump?
They asked me what I thought.
Yeah.
It was just before tariffs were announced.
Right.
And I said, I think certainty, we're going in very uncertain times.
Go for the 5.
I'd go for the 5-year. Went for the 5-year, and then the Trump tariff chaos exploded almost like within 48 hours or whatever it was. And they said, hang on, we've got 14 days to change my mind. Should I change my mind? from a 5 year and get out and go to variable or a 2 year or stay with a 5 year.
Yeah.
And I said, let's just wait and see, because and what I see happening is actually probably 5 years, just stability.
Yes. Well, given that the yields after that initial drop, at which they did initially, there was a drop, and everyone was and this is going to be good for defined benefit pensions and all that sort of stuff, because as the yield drops, the value increases. However, we've now seen that immediately that reversed and started to climb, because the market went, hang on a second, what does it really mean? What does it really mean?
Nobody knows.
I mean, to me, the most frightening thing about this is that the market seems to be indicating that they think that the UK is so risky over the next 30 years that our long-term debt piece, which, that is what gilts are effectively, they're putting a much higher premium on, higher than they were in 2007.
So people complain about the audio, and I did say, please don't tell me, but
yeah, it seems our audio is screwed.
Yeah. So I just put on the screen, we'll upload clean audio afterwards. We just carry on anyway, because it'll come in and come out, and we'll just have to keep talking. Because we're also recording this. So
yeah.
What does that long term give? So the highest yield, 30 gilt since 1998.
Right.
Does that have any consequences or ramifications for today?
Only if we want to do more QE.
Correct. Okay, let's talk about money printing. So some people are going, oh, printers goes.
Trevor being one of them.
Yes. And someone else saw today said Bitcoin fixes this.
You so really got a face for rebel in there.
Stig really spit his wine over his computer. That was very funny. And they were serious. They weren't joking. Like, no, Bitcoin fixes this.
I'm going to start
Go on then, fix it. Use your Bitcoin and fix this.
What I love is when somebody goes, you'll always get someone who goes, Lightning Network. Yeah, I don't think you'll find that on-chain. But anyway, that's just not right.
But so, if it could fix everything, it would have done it by now. And the reason it hasn't fixed anything yet, because it can't.
What do you mean in the last 15 years where they haven't found another use for blockchain as technology? That's sorry. I mean, what can I say? 28 years in tech. I just...
Just for a recap, right? I had some Bitcoin. I bought some. I can't find it. I hope I'll find it one day. I think it's a fun thing, put a little bit in, right? It's a sentiment index.
Yeah, that's all it is.
Pure, simple sentiment. In other words, how many people believe, and a lot of people do believe.
Yeah.
And if you just believe, there's something wrong with you.
To be fair to them, every other belief system has been ripped to shreds for them. Because let's face it, your average Bitcoin investor is not a 75-year-old man.
No.
Your average Bitcoin investor is a young person who goes, well, it's the only bloody day I'm never going to have any cash. Just shed one, his comment, or her comment, I apologise.
Trump only backtracked because of the 10-year yield sell-off. It was a bluff.
Yes, not only was it a bluff, I imagine him there in the White House laughing at you. That was, look what I've done. Look at the market. It's going up, it's going down. It's going up, it's going down. I just...
Has everyone sold? Right.
No.
Let's suppose us. We're party, Jared.
I'm going to prove
Literally, is that clip from Trading Places?
Yeah.
It's Dan Aykroyd and Eddie Murphy in the pit.
What on Stu Future? Yeah.
It's funny though. I'm sorry. I should be laughing. This is Alex and I enjoying our gallows humour.
Tasmanian Devil.
Okay. Tasmanian Devil on YouTube asks, does the Stig have an opinion on the gold-silver ratio reducing? Silver has been increasing considerably over the past year.
Tasmanian Devil, all I can say is, personally, I invested a lot in silver because I did believe the ratio would reduce, more so than I did in gold. And I am kicking myself in the crutch on a regular basis about that. Don't get me wrong. The silver return has been very good over the last couple of years, which is when I sort of started because I had some cash and put that in there. But I'm not sure unless we industrial uses for silver are, as far as I'm aware, increasing. Gold will always be king when it comes to, oh, but it's shiny. So nobody is going to have a silver-backed currency, and the central banks of Russia, India, Singapore, the Stans, Poland are still buying shitloads of gold. So I don't know. I don't think so. I wish it would, because I've got an awful lot more silver than I have gold.
Guys, please, there's no point giving us a running commentary on the audio. It's bad, it's good, it's bad, it's good. We're going to continue no matter what, and I will upload the clean audio afterwards onto the podcasts. So I can't control it. I can't control it. It's the internet broadband speed gods. Okay, we'll just keep on talking because this is recording for the audio afterwards. Did you hear about the giant gold asteroid made of solid gold that's worth $40 quintillion?
Didn't they make a Netflix film about that with Jennifer Lawrence? Don't Look Up.
Oh yeah,
yeah. Where we're going to mine the asteroid. Is it going to collide with Earth? Is Elon going up? Is Donald going to actually be there with a pickaxe, getting some gold out of it?
Now, what was the other question I wanted to ask you?
Nick Jones, you troll wind-up merchant.
Does the Stig think the UK will have a booming economy soon?
By boom, do you mean like the Houses of Parliament after V for Vendetta? Because in that case, yes, very much.
I've never known a more disappointing political array of all the parties.
I know. People thought
just,
Boris was bad.
No, I don't just mean the part. I'm not about the government. I'm talking about Labour, the Tories, the Lib Dems, Reform having infighting problems. Like, you kind of want to just get the whole lot together and go.
Don't forget about the Labour politician MP who's just been done for rape and paedophilia. Yeah. I mean,
it's that's why we're in this shit show.
Yeah,
we are in this shit show because of repeated political failure, and there are theories that it's all by design. And there are theories it's the uni party, and it may or may not be whatever. But it is definitely
short-term
policy making that's put us in this situation.
I think the Stig is too optimistic. Yeah, Nick, you may well be right, but I'm drinking red wine, so I'm a very optimistic guy.
Yeah. On a serious note, though, I just think that for everyone who needs a home, if you're someone buying a home to stay in the long term, proceed as normal. There's no point in waiting, right?
Yes.
Get out there. Buy. If you're someone who's thinking of buying for 2 years or 3 years or so.
No, I mean, if you are someone who has a job opportunity coming up in the future that might mean you have to move, you're not quite sure, I would seriously not be seeking money.
The other thing that changed, a lot of people, back when I was in my 20s and 30s, a lot of people would buy a flat, their first place to live in, knowing that their career might take them abroad, but they would just, if that happens, I'll just rent it out.
You can't do that anymore.
No, you can, you don't want to anymore.
Because you can do it technically, but the issues and the paperwork and the admin and the risk are just not worth it.
So I think that genuinely, if you're looking to buy a home at long term to live in for the foreseeable future, as in 10 years or more, carry on as normal. There's never a bad time to buy if that's your reason for buying. Even if you think that the prices are going to be coming down for the homes you're looking at, you should still be out there viewing. However, if you're a short term, as in 5 years or less, I might be wanting to wait for this to play out. Yeah. Because if you're making a decision for the next 2 to 5 years, the next 2 to 5 weeks could alter materially and significantly also
Oh, yes.
for the next 2 to 5 years.
Yep.
In a way, it could affect your decision. However, having said that, I would still be out there. If your provisional intention is to move and buy,
Keep looking.
keep looking, go ahead, proceed as normal. Hope that by the time you've exchanged, by the time it comes to exchange, things are settled down, you're happy to exchange. Because at the moment, the British system allows people to do that, and then go, actually, the world changed, I'm changing my mind.
Yeah.
And the 20% of that survey, we've backed already.
Yeah, absolutely.
I wonder if that's because their portfolio was a deposit.
Well, this is when you see Kicking Mustang. I would imagine that what he's thinking is the reason he's going, interest rates will come down and house prices will also fall simultaneously, which people are going, but that's not possible. If interest rates come down, house prices must go up. Again, I go back to interest rates are not the most important factor in house prices, although the mortgage you can get and the term of it is, it's your wages that will decide that. So what happens with wages will be the overriding factor. But deposit-wise, people have just made, let's face it, the stock market has gone from, what was it, 7.6 to 8.7. If that's just the FTSE, but you could have been in the S&P. They've made massive gains in the last year.
Yeah.
And now the correction only takes us back 1 year. It takes you back to April of last year for the FTSE, for instance. So it's not a massive correction, really. If you go back to 08, 09, that set you back 7 years. If you go back to, but
it's early days, right? This hasn't always played out.
It hasn't played out.
And you think it could get a lot worse?
Oh, my view, not because of Trump tariffs, but just the state of the first world economy.
Because of what was already happening.
Is that what I said was, if this is 2 years ago, if we hit 9,000 and the bubble is that big, when it goes bang, we could end up at 4,500.
The FTSE?
For the FTSE.
So like a 50% drop.
Correct. Now, Jesus, what do I know? This is what the maths suggested to me when you look back.
Oh, maths?
Yeah, maths.
Oh, it's just maths. Sorry, no, we only deal with ideology on this channel. We don't have maths. But they've got a good. Some Ron Buck says there are a lot of rumbles about the possibility of 2 interest rate cuts before the end of the year and a loosening of lending criteria. If this comes to pass, will house prices take off again?
Well,
I don't think so.
And this is the problem. The loosening of the lending criteria, really, Rachel Reeves should be smashed in the head.
Yes, we all heard what you thought about that.
I mean,
no, you can't say that.
Sorry. No,
Yes,
she shouldn't. I apologize. That was obviously a not a real suggestion. It was a metaphor for.
And you don't mean it, and you're not inciting violence against Rachel Reeves.
No, in no way am I doing that. That would be a terrible thing to do. But I am suggesting that although, on the one hand, she's put stamp duty back on, to then, on the other hand, say, but I'm going to loosen lending. Handcuffing people to 40-year mortgages because it's the only way that the interest payment is affordable is just not doing your citizens, the people you are supposed to be serving, any favors at all.
It's really not. But do you, like in the real world, do you see it changing? Do you see them rowing back against that policy and actually starting to restrict lending?
You think banks, as they did during the
government? I think. Do you think the government will start to do what you want them to do?
I don't think they will. I think the only way this works is if the banks think it's too risky, but the government are still underwriting a certain proportion of mortgages.
Yeah, it's a very small number, but yeah.
It shouldn't be any.
Yeah, we know that Trump ordered the 90-day pause on tariffs except for China. China don't get it was.
Oh no! Well, he's never gonna. He doesn't like China.
Stocks soar after Trump pauses some tariff hikes on most countries. Up on the screen because it's.
Sorry, I thought it was a 10% blanket universal tariff, except for China, who get.
No. So yes, then a lot of countries got extra tariffs. So far, 70 countries have now said to the US, we're coming to see you to negotiate.
Exactly.
Which is the point.
Yeah. He is laughing. He is just sitting there laughing all the way to the American tariff ban.
Yeah. S&P 500 is 8.5%.
Yeah.
Is that on screen? Am I showing?
Don't know. Hold on.
Yeah, there we are. I'm probably not sampling stuff on there, but there we are. And Reeves is sticking to her fiscal rules.
She
Reeves
changed her fiscal rules. I just
rejects using fiscal rules escape clause for the tariff war. Okay, just into a gun. Yeah. Trump shock pushes US and China toward decoupling cliff edge. The Trump shock says the tariffs pushes US and China towards a decoupling cliff edge.
okay. I'm not sure what that means.
Right. What it means is China and US trade, I think it counts for 45% of the globe of all trade.
Is it really that much? I've never looked into that.
I heard that. That's from
You're saying the Americans are buying so much.
Two-way.
Yeah, but it's not really two-way, is it?
I don't know. But I just heard the total value of combined trade in both directions is 45% of global trade.
I'm guessing the vast majority of that is China exporting stuff to America.
So if that does go, that I mean, no one knows what that looks like that happens.
No, well, and this is where see 4,500.
And on okay, okay, so yeah. If that happened, if the China
And the impact of all of the companies, the FTSE is not a UK index. It's global multinationals. You know, it's a dividend index rather than a growth share side. Can you imagine the impact to the number of widgets those companies are going to be producing over the next X years if everything between China and America falls apart?
it's supply chains, isn't it? It's
Yep.
yeah. Well, that's interesting. Okay, you heard that here first. I think everyone knows that if 45% of global trade was to fail,
50% impact on the FTSE.
that's going to have a very big impact on the whole world.
Yep.
And that's the kind of thing that could trigger the Black Swan event.
The Black Swan, Natalie Portman. Wasn't she lovely?
Yeah. I'm just watching the Phantom Menace and Clone Wars, so episodes 1 and 2 of Star Wars with the kids. Natalie Portman is Queen Amidala.
Yeah.
But yeah. So, okay, let me ask you a question. How long do you reckon this takes to play out until uncertainty has just come down to kind of manageable levels? Is this weeks or months?
No, it's certainly months, if not years. There are I thought that 2024, by the end of 24, we were going to see everything implode. It didn't. The zombie companies are still there. Everything just kept hanging on in there. Yes, we saw gilt yields climb and climb and climb. We saw interest rates rise. And yet with forbearance, with all of this forgiveness, it's carried on. You know, unemployment has ticked up a little bit. Things are,
the bastard won't die.
Exactly, the bastard won't die. But people are unhappy. There's a more divided society. All we see all the time is whether it's religious division, political division. That's all we're seeing. This has not been a happy period of time over the last few years. But it hasn't gone bang. Trump has come in and decided to give it all a big shake and laugh his way to trying to protect and isolate America, which, as president, his responsibility is to his people. I get that. But how long will it take? Once this piece, tariffs and global trade and potentially impact to the FTSE, etc. FTSE, the stock markets globally, because the Chinese market has been utterly smashed. Once that plays out, we still have the issue of all the debts that we've forgotten about with this little play that's going on at the moment. And the debt with the interest rates and the issue and the house prices and across the whole of the first world. Look at Australia, look at Canada, look at their house prices. They are in as much trouble as we are, and wages. And therefore you then hit the unemployment, at which point you go, oh, CBDCs, is that really a thing? What about the digital IDs we're talking about in this country that are then going to be, there are so many things because we are in the middle of a technology revolution. And that is pain. Just like the Industrial Revolution had a few very rich, mill owners and manufacturers being very happy, it had people moving from the rural areas to the cities and living in ghettos. Well, the technology revolution is going to have the same impact, and we are in the middle of it right now. Just like the Industrial Revolution, there will be a bright golden future at some point once we've learned how to use technology properly, and machine learning is helping us, robotics are helping us, rather than potentially impacting jobs. So there's not that much of that at the moment. But that is a long time down the road. We're probably going to live through, I would think, 3 to 5 years of serious instability. Then about 10 years of, okay, well, we're recovering. You know that GDP graph?
Yeah.
Over the next 3 to 5 years, I do not believe anywhere in the first world is going to go, look at my GDP per capita. I'm doing fantastically. Look at that. It's all cruising. I just can't see it. But then the next 10 years, you get back to that growth period, but the same sort of growth that we had after, say, the Second World War. If you were to read the charts now, what you look at, if you gave it to an AI, a machine learning algorithm, and said, look at these graphs, this is what we looked like after the First World War, this is what we looked like after the Second World War, what do you think has happened here? And it would go, I don't know, but maybe 2008, did you have a war? No. Well, 2020, you must have had a war then, because, look at that sharp drop, and then look at the increase in debt. That only happens with the whole war thing, doesn't it? No. But we are effectively recovering from a war where the global population didn't get decimated and people didn't get gassed and so on and so forth. But we have just stagnated for 15 years in the first world. Anyway.
Yeah. Okay, so 3 to 5 years
of uncertainty, yes.
Okay. Some people have said, where do we put our deposit saving for our house?
I wish people would ask that.
I don't know. The thing is, it's a very fair question, okay? Because up until this uncertainty came along, you made the decisions and they put themselves, and there were no great risks. Now, people are going, I just want to lose my deposit.
Exactly.
I'm not trying to make
grow
money.
it. I just
want to protect it. I want to not lose it. What should I do? And my first thought, notwithstanding the fact that Trump has stated he wants to devalue the dollar, or has words to that effect, right, to make America better value, I think I would probably be tempted to put mine into US dollars, cash, as the least unstable option there is.
What about bonds?
Well, they've been. You think they're more stable than cash?
Premium bonds. Yes. I think there are some good investments, but and sorry, we are now overstepping the boundaries of our. Oh,
we're two blokes on the internet with a glass of wine, going, okay. Oh, where do you want to put your money?
There is no investment advice coming from either.
Oh, speak for yourself. I'm advising everybody. Of course not.
As I told you earlier, I had a conversation with a friend of mine who is retiring in 3 years, and he said, "I'm so worried about what's going to happen." And this conversation was a couple of months ago, and I said, "Well, Steve, if you are that concerned, and if you are, you believe you've got enough, right now, what I suggest is you turn it all into cash, wait for everything to crash, and then put it all into a SIP. You've just trapped some funds, whatever you want to do." And he went, "I couldn't do that. That's too risky. I couldn't do that. may give him a call this evening and say, so what about my idea to have taken out cash 2 months ago and then put it into
cash ISAs, someone's saying here.
Yeah, Rachel Reeves is about to screw your cash ISAs.
You think so?
Oh yeah, she's going to reduce the 20,000 absolutely and make you invest in the stock market. That thing is going to crash.
Was it? Sasha mentioned said that she should reduce it to 5,000 per year. That'll beat most people's.
I think that's what she will do. Yeah.
Please stop commenting about the sound. Please stop commenting about the sound. We know there's nothing we can do other than upload the clean audio afterwards. So please stop all the comments about the sound. Don't help. Keep drinking. Oh, the sound's good. That's bad. It's good. That's bad.
But wait, it's more than 10 minutes. I knew what your plan was.
Yes. There wasn't a plan. I would have been happy to do it for 10 minutes. You're still talking. I've got nowhere else to be.
No, I'm ranting now.
Swiss francs, says Martin Turner.
Well, yes. Yeah.
Now someone's just winding me up. Okay, well, listen, I'm going to call it a day then. Is there anything else you think you can offer? Any observations you'd like to finish with on the current situation?
Yes. White Rioja is very, very underpriced. And people, because of the red, that's all they buy and they drink. It's very expensive.
White Rioja.
That's it. Fantastic wine. And because it's not that popular. Yeah, good, right? Yeah. Actually, that's your investment. Invest in En Primeur White Rioja.
I've just said that, put it in the live chat, buy White Rioja.
And then in 5 years,
because wine is an easily liquidized.
Yeah, not when I'm around.
Yeah, that's a different kind of liquidation, but yeah. All right, guys, listen, that's there's not really much more to talk about at the moment. In terms of the housing market. I've got most of the facts lined up for 5 Fact Friday already. It's only Wednesday. But at the moment, it's just, is the housing market affected by this? Yes and no. Because yes, because of the people who are worried that this instability increases the risk of buying for some reason. No, because there are lots of people who just need to move house. Life goes on, whatever.
Oh, yeah, but there will be people who have been trying to trade, day trading, etc., to build up deposit, who are now not going to be.
Day trading is it? You might as well go down to bookies.
Yep.
Literally.
It's very popular. And spread betting.
Have I told you the story that when I was 19 years old, standing on the edge of a short sterling bit on the London International Financial Futures Exchange, the chief executive of the company I worked for, which was the largest broker on that exchange, walked up to me and noticed me just staring in bewilderment at what was going on. And it's funny because the company was owned and run by poor people. He wasn't.
Right.
He was an extender.
Yeah.
Very switched, very sharp, and who'd got to the top, being very sharp. He leaned over to me. I'll never forget it. He leaned over to me. He said, Charlie, it's the biggest league gambling in England.
Yes.
So it's all it is.
That's what it is.
Let anyone ever tell you differently. And I offer the boss of the biggest broker on life say that. It just stuck with me. Like, wow, okay. He said, don't ever let anyone tell you different. It's a gambling league.
Fugazi.
Yeah. Oh. I saw that. I was putting out posts there next game. Hold, steady, calm. I was like, no, buy loads. Like, buy and sell. If you know what you're doing, buy and sell. I just replied with that meme of Leo DiCaprio. On that ridiculous note, guys, have a great Wednesday night. I'll see you next video. Thanks.
Good night.
Guys, everybody.